using the proven theories of Elliott wave analysis. She is one of America's leading coaches for successful traders and the creator of the FX Traders Edge program. She is passionate about teaching individuals how to trade market cycles using entrepreneurial skills and habits to effectively manage their business. So with that, I want to turn things over to Jody today, and she's going to be sharing with us a presentation on latching on to trends. Jody, the floor is now yours.
Thank you so much, Rolly, and welcome to this webinar entitled Latching On to Trends Using Elliott, Fibonacci, and Harmonics. I don't think I speak as fast as the last presenter, so just bear with me. I'm kidding. I want to thank Trading Pub for inviting me here today to speak to you about a topic that I'm ever so passionate about. So even though I don't speak as fast, I hope to get a lot of information in this webinar to you that you can use right away. So thank you for taking time out of your busy schedules to be here today. I truly appreciate that. I started trading currencies, as Rolly mentioned, on Wall Street as an interbank trader to kick off my career. It has been a full career, having spent about 30 years in the industry. And when I look back over these 30 years, I can't think of any period of time when I didn't use Elliott wave analysis, which is today's main topic. In fact, I wouldn't trade without it. We have taught thousands of students over the years how to read the market maps with Elliott wave lenses. And today we are going to impart some of that Elliott wave knowledge and passion to you, mixed together with Fibonacci and harmonics. So I'm going to start with some theory, followed by an exercise. I will then pause and briefly go through our training program and services that we offer, and I will end by showing you a few of our wave counts on markets that show great potential for trend moves, and then take questions. I just showed the disclaimer always when I'm presenting, so please just read it to yourselves. Great. Why don't we just start with the 3 pillars of trading success? What are they? What does a trader need to have in his or her trading arsenal to be successful, to make consistent profits? We believe that a trader needs 3 things: the analysis, the strategy, and the coaching and accountability. Without having one of these 3 pillars, it is highly likely that the trader will not succeed at trading. And having one without all 3 is like going on a hiking trip up a mountain without climbing gear. Many traders think the strategy is enough, but it really isn't. In fact, I'm just writing a book right now. Hopefully it'll be published within, well, in 2015, and it's all about what we need to succeed as traders. And it's much more than just the strategy. Having said that, we are going to take you through some interesting things that you can learn today and some pointers that you can take back with you in your trading. So let's just start with the analysis. A key pillar of achieving consistency is to have a thorough knowledge of the market to determine possible future scenarios and be prepared to take advantage of opportunities that arise. We use Elliott wave and harmonics, and Elliott wave and harmonics are tied together with Fibonacci in order to have market context and increase the likelihood of successful trades. So market context for me is really, really important. And the way we do that is to do a top-down approach, and I'll show you a little bit about that today. A top-down approach using a bigger time frame, because it's really important not to get our head caught in the, in the clouds or in the forest, to be able to separate the forest from the trees so that we see what the light at the end of the, at the edge of the forest. We need to be able to understand what the market is doing, what the trends are, what the major trends are, in order to not buck the trend and go against the trend and not really catch the more lucrative move, the easier move, which is the trend move. And now we are in trend markets. Strategy is also very important, because first comes the analysis, but then obviously comes the strategy. We need a highly effective strategy to be able to identify the exact entry point, the stop loss level, and the profit target, and to know when to trade and when to stay out of the market. And removing the emotions is key. That's why we have a trade plan. which is part of our strategy. It identifies where we're going to enter. So the more we understand what our trade setups look like and we can visualize our trade setups, when we find them in the markets, we should readily be, excuse me, we should readily be able to pull the trigger because we recognize the setups. We can write them down, we can write down our entry, we can document our chart, but we really need to be able to scan through various charts to recognize the most opportune, the highest opportunities, the highest probability trades. Finally, coaching and accountability. To combine all the knowledge and apply it properly, this is the third pillar. Coaching is an expert to evaluate your trades and give you feedback, or a mentor. And we have a trading room, so we have mentors in the room giving feedback all day long through the Skype box, actually. And accountability is key. Even if you are not part of a group, just grab yourself a trading buddy to share your trades with, and plan your goals and receive feedback. I mean, it's really important for like-minded individuals who learn the same strategies, or even if you learn different strategies, that's also good to do. If you learn different strategies, grab a trading buddy and say, this is what I'm seeing in this currency pair. What are you seeing? And this is why. What are you seeing? You know, I'm bullish and I'm looking for this price target. Are you as well? Knowing that the other person is going to look at it from a slightly different angle. If you take the same course and you have the same training and you speak the same language, well, I think that's even better, because then you're going to, you know, call out the trades that you recognize, the trade setups, and be able to communicate with a common language. So grab yourself a trading buddy or get into a chat room or whatever, because trading can be a really lonely game. Tell me about it. It really can. After I left the bank, I set up my own trading desk and traded 20 different futures markets by myself for 2 years, and I just couldn't stand it anymore. I needed to communicate with people. So so I did. I started my own trading business and continued to trade, but continued to help people as well. That was really a good marriage for me, to continue trading and to be able to help traders. Sorry, I'm on a main street and you're hearing the noise in the background. So let's just spend a little bit more time talking about Elliott wave analysis and Ralph Nelson Elliott. He's a very interesting guy. He studied various market indices over a 75-year period in the 1930s. While he was bedridden, actually, and he pored over thousands of stock market data, and that was before computers, and he discovered that the stock markets traded in repetitive cycles, and that these cycles or waves reflected the emotions of investors at the time. So in our analysis, we use Elliott wave analysis in order to have market context and to do a top-down approach, and we know that each of the cycles have different wave personalities, which is why we'll discuss shortly. The other thing that, the other bit of analysis that you probably all know about is Fibonacci. So Fibonacci was known to have discovered the Fibonacci sequence of numbers. And I like mathematics, I've always liked math, so this really, really intrigued me when I learned about the Fibonacci sequence, and I learned that when you divide one number by the next number, you get 0.618, and then when you went backwards or took the inverse of 0.618, you would get 1.618, and then if you skipped a number, you would get another ratio, and all of these ratios are the retracement targets and the projection targets that we know today, that we use in Elliott wave analysis, that we use in Fibonacci trading, that we use in harmonics. I'm going to show you a picture on this slide. This is from Robert Prechter's book, The Complete Market Cycle on the left. I should have it footnoted there. I need to add that. So this takes into account the Fibonacci sequence, and this is the 8-wave market cycle, where the market moves up in a trend, which is 5 waves, and then corrects in 3 waves. And this is a standard 8-wave market cycle. Not all market cycles are alike, as I'm sure you know, for those of you who trade Elliott already. This corrective sequence is called a zigzag, and it is probably one of my favorite corrective sequences, and we are going to do the case study using this corrective sequence, the exercise that I told you about I was going to do. So the Fibonacci sequence is apparent in this picture. It's just incredible. Let me see if I can put up a marker or something. Oh, okay, not sure where. No, okay. I'm not sure if you can see my cursor here, but the 5-wave cycle can be 1 wave, or if we break down the waves, it's 5 waves, and then if we break down the 5-wave sequence, it breaks down into another Fibonacci sequence number, 21, and then 89. So the markets are waves within waves within waves, and the patterns repeat themselves on every single time frame. So if we're looking at this picture on a monthly chart, when we move down to the very small time frame, we're going to be within the wave structure of this big picture. So we just have to keep that in mind. But getting back to the Fibonacci sequence is just very fascinating, the way it all unfolds. And of course, we determine our wave projections using Fibonacci and our wave retracements using Fibonacci, and we tie it all together in harmonics, using harmonics as well, harmonic patterns. Fractals, that's a word that I want you to learn today. It means that the patterns repeat themselves over and over again. Self-similar patterns composed of smaller copies of themselves ad infinitum. And you see that in nature. You see that in the clouds of the sky, in the branches of a tree, where if you break off a branch of this tree, it is a smaller replica of the entire tree. And you see that on coastlines, you see that in mountain ranges, you see that in nature. You also see that in fractal images, which is a special image that is generated using mathematical formula that stems from Fibonacci. The image can be magnified millions of times, and in each case, a new image is revealed. So this is a fractal image. Here's another beautiful fractal image. So why am I showing you fractal images? Because fractals show up in the markets as well. And in these markets, it really doesn't matter whether you're looking at a daily chart, a weekly chart, a 15-minute, an hourly, whether you're looking at dollar yen or gold or the Australian Canada cross or any cross that you want to trade, or the S&P, it really doesn't matter. You are going to find these patterns in every single time frame, in every single market, which is really good news for traders, because if you find the patterns and you learn the patterns well, then you will be able to trade the patterns well. And that's what we are all about. That's what I'm all about. I'm a very visual person, so I really look forward to finding these patterns and scanning lots of charts like this at a time to see if my particular trade setup is there. So let's just take a step back. I know that the topic today was latching onto trends, so I just want to talk about trending versus sideways markets and talk a little bit more about the market cycles from a practical standpoint and how you can trade them. So we know that there are only 3 things that a currency pair can do. It can go up, it can go down, or it can go sideways. And in Elliott wave analysis, we count the waves, and we count the trends, and we count the sideways corrections. The idea is, this is a picture of a long-term trend in red. So let's say that this is the daily chart. And then let's say that the green line is a 4-hour chart, and the dotted line is an hourly chart or a 15-minute chart. It really doesn't matter. So you can see how the cycles break down as we go to smaller and smaller time frames. So too when you're trading, if you're looking at the big picture, like the red, the daily chart, this gives you the trend on the daily chart. So if you're a swing trader and if we are in a bullish trend, then you're going to want to look at the 4-hour market and buy the dips on the 4-hour market or buy the dips on the 15-minute or the hourly market into the trend. I'm also going to talk to you about the end of trend moves. However, it's much easier to buy in a trend, and that requires a certain mindset, because buying in a trend means buying when the market goes against you. So psychologically, you're buying on the dips. You're buying when the market goes against you. And it's not so easy to just buy. So we also use different confirmations. Such as, what are some of our confirmations? Candlestick patterns, reversal candlestick patterns. I use just a small handful of reversal candlestick patterns. So I look at hammers at the bottom of the market, or shooting stars at the top of the market, or engulfing patterns. It's just a way to tell us that the buyers are coming back into the market and that price might start to move up again. The other thing, once we learn the Elliott wave patterns, we will learn what a correction looks like. And if the correction is a zigzag correction, we can measure that zigzag correction. So for example, you might want to start by measuring the A versus the C wave and look for at least a measure of equality between wave A and wave C before the market turns around and starts to head higher again. Another thing that you can do is you can draw trend lines and channels around the current market price action. So for example, if you are waiting for the trend to move higher, you would draw a channel lines around the corrective market price action and just wait patiently for that correction to play out and for that correction to turn bullish and to start breaking through the upper end of the channel before buying again. So these are some of the ways that we use to get into the trend. Another way is to use certain moving averages. We have a moving average chart setup that we use, and when price comes back to the moving averages, that forms also support, and that tells us that we're not buying into strength, we're buying into weakness, which is what we want to do, so that we don't have to weather the storm from this peak to this corrective move down here. When the market is stretched, we look for the rubber band effect to take us back down, and back down can mean a sideways move, corrective move, or it can mean a zigzag, which is a steep corrective move. But and really only time can settle that. We don't know what the correction is going to be. Only time can settle that when we see how the correction plays itself out. So once we learn the types of corrections that the market can travel, then we will instinctively know when the correction is over and how to trade the market reversal to resume the trend. So the other thing that I want to just talk about before running through an exercise is turnaround, is market reversal points. So on the left, we see that the market is making lower lows and lower highs. So that's a downtrend. At this low point, at this price low on the chart, the first move is for us to move higher. At this point, once the market moves up, and I hope you can see my cursor, once the market moves up, we expect the market to continue lower again. So the market comes down, and at this point we're at the crossroads. We're at a juncture because we don't really know if the market is going to make a new low or if the market is going to reverse and take out this previous high. Actually, this is called a 1, 2, 3 reversal, and this is a great confirmation for a change in trend. I'll give you three things to look for a change in trend confirmation. The first thing that happens is divergence. And I use the awesome oscillator to look for divergence between this peak and this low and this low. And I look for divergence between waves 3 and wave 5. And once I see that, then I'm already alerted to a possible change in trend. Now, it's not for sure that we're going to reverse, because in these strong markets, we have corrected in many markets and then continued to trade down again. So what we need is another method for confirmation. That's number one, divergence. Number two would be a trend line break. So we would draw a channel around, we would connect the highs and connect the lows and draw a channel around this downtrend, and the trend line break would be a break of this upper trend line, and that would tell us that perhaps the market is due to move higher. And then the third thing that I look for is the 1, 2, 3 reversal, and that would be the final confirmation. So that's when price doesn't make a new low, but rather it moves up and takes out this prior price high and continues on higher. So if you look at the markets and if you just draw your trend lines and your channels, your 1, 2, 3 reversals, and look for your divergence, that's a pretty good indication that in fact the market is turning around. But there is more to say about this. In the meantime, during these strong trends, it's better not to think about the reversal, because you might be thinking about a market reversal up here or up here if you see divergence, and that would be way too soon. You need to wear your trend hat at all times, and only when we really have these three things taking place will you take your trend hat off. Other than that, you really need to think about sticking with the trend and just selling the rallies in the case of the downtrend. Okay? It's just really important to do that. I've seen so many traders, and I've done it myself, picking tops and bottoms and having it go against us. Like, it's just so obvious sometimes, when I see traders talk about buying when it's such a strong downtrend, and I will look at the bigger time frames, the weekly, the daily, the 4-hour, and just really not understand. And then I look down at the smaller time frames and I see what they're talking about. They're talking about a small correction on the 15-minute chart. That's fine when you're day trading. However, you need to be cognizant of the bigger trend, because that small correction is it's not going to take very long, and you've got to take your profits very quickly on that and look to go the other way. But sometimes when you take a trend, when you reverse the trend, it's hard to stick with the trend after that. So basic wave patterns. In a 5-wave sequence for Elliott, the starting point is point 0, the end point is point T. I just want to run through some wave personalities and show you how you can trade a wave 3 and how you can get into the trend a little bit better. So let's look at this 8-wave cycle. Point 0 is the starting point. At point 0, that's the bottom. That's when the market is less emotional, the market is still bearish at this point, no change in trend is evident. After a wave 2, traders continue to sell, so that wave 2 movements are usually sharp, thus correcting most of wave 1. In fact, this is an ideal time to get in, because in most cases the wave 2 can correct more than 61.8%. Sometimes we have our double bottoms, so we have a very small stop loss during wave 2s when we do correct most of wave 1. And how do we know it's wave 1? We know it's wave 1 when we see 5 waves up followed by 3 waves down. So one way to get in early on a trend is to look at the daily chart just to get the big picture and look to see when we've completed a wave, when we've completed the end of a corrective sequence, and then we can move down to a smaller time frame to get in early, okay, and wait for 5 waves up and 3 waves down. This point 0 can be the start of a wave 3 on the bigger time frame. It can be the start of a wave 5 on the bigger time frame. It doesn't have to be the start of the entire trend move, because we see these 5 wave cycles on every time frame. Let's talk about wave 3 now. Wave 3 is a very powerful uptrend. The market is really emotional at this point. This is where price is really far from the moving averages, and the moving averages are pointed up in a 12 to 2 o'clock position. So the moving averages are moving up, and price is above the moving averages, and you want to be buying dips on a wave 3, because this is the strongest and the greatest for profit potential, this wave 3. So don't try to buck the trend when you see the moving averages pointed up and when you see price pointing up, just because you think the market is stretched. So wait for a small sideways correction to buy it. Wave 4, that's our profit-taking wave. Early traders take profits and others enter long and witness whipsaw price action. Wave 5. It's often characterized in commodity markets by blow-offs. Sometimes the wave 5 is steeper, even steeper than the wave 3. But in currencies and stocks, they usually aren't. In currencies, wave 3 is usually the strongest move with the steepest slope. And wave 5 is typically the trader's last struggle to create high prices. It's not as enthusiastic or euphoric as wave 3, and this is where you see momentum divergences. And I talked about divergence between the top of the wave 3 and the top of the wave 5. And again, I use the awesome oscillator. That's Bill Williams' awesome oscillator, which has the 534-5 setting, also part of the Fibonacci sequence. So if you use a MACD and MACD, you can change your settings to 534-5. It seems to fit the Elliott wave cycle very, very well, and I've used this for many, many years. One way to target the end of wave 5 is to measure wave 1 and look for the same distance as wave 1. We call that equality with wave 1. One way to target the end of wave 3 is the most common ratio, the most common projection is 1.618 times wave 1. 161.8% times wave 1. That's typical. If wave 3 is extended, then it's going to be much longer than 161.8%. It will move to the next level and even the next Fibonacci projection level. So the thing to do is to start with 100% and then say, okay, great, we have wave 3 equality with wave 1. Once we break through 100%, let's target 127.2 or 138.2 on the way to 161.8, because we know that most likely we're going to get to 161.8 on a minimum, at a minimum. If it's a very, very strong trend, then we're going to go to 261.8. And we only know that once we break 161.8 and we keep going, that's when we have to say, okay, we're going to go higher. We're going to target the next Fibonacci projection level. Now, what that also means is that sometimes the wave counts are also extended. So the wave 3 might not be 5 waves. The wave 3 might be 5 waves and then And then if it extends by 4 all the time. So if we can count 5 waves, and then the market retraces, and then we break through that top, the next number that we're going to look for is 9 waves. I don't have a picture to show you, but we're going to be able to count 9 waves before the wave 3 ends. Once we finish 9 waves and the market keeps going and we break through 161.8%, we add 4, we're going to look for 13 waves, and then 17 waves, and then 21 waves. We have many situations, and perhaps if I remember when I show you live markets, I'll show you some of the extended waves. We certainly have an extended move in the euro, for example. So we'll take a look at that. So that's one way to count extensions, because we never know how far a market is going to move, although we do have a clue by looking at the bigger time frame and running our Fibonacci tool on the bigger time frame. Let's just a word on scalping, trading styles. So there are many trading styles. Some of you are scalp and momentum trading, others are day traders, others are swing traders, and others are position traders. So these are the time frames that I look at, that I would recommend for all of these different trading styles. And the reason is I like to look at 3 different time frames, and I like to look at one time frame for the big picture to see what trend we're in, and then take trades off of the smaller time frame. So let's start with 4, position taking, looking at the weekly, daily, and 4-hour chart. As a position taker, you might only take 1 trade a month. I'm just making, I'm just being very basic here. So let's say you take 1 trade a month and you're following that trade, and your goal is to make 100 to 300 pips in a month with no leverage. Once you leverage this up, it's really all about money management. You can make a nice monthly amount by making 100 to 300 pips in a month. It all depends on the amount of capital that you have and the leverage that you use. And I'm not a big fan of using high leverage, by the way. I do not use big leverage. 5 to 10 times is enough for me. As a swing trader, you can make the same 100 to 300 pips a month, but you might be taking 50 to 100 pips a week. And 50 to 100 pips a week, or I guess it doesn't add up quite to 100 to 300 pips a month, but this is what we're looking at. We still get the same result, but you're taking a few more trades. As a day trader, let's say you try to take 20 to 50 pips. How many times a week do we need to take that to make 100 to 300 pips a month? Let's say 2 or 3 times a week. That's what you need to make 100 to 300 pips a month. And as a scalper, if you make 20 pips a day, you're talking about 400 pips a month, less days when you're not going to be profitable. This is just a rough guide, and this is just to show you that at the end, the results are the same, whether you're a momentum trader, a day trader, a swing trader, or a position taker. This is what I recommend that traders make consistently in a month. You know, why shoot yourself in the foot looking for 1,000 pips? If you can do it, come and talk to me. I'll give you a job. Okay, email me at jody@fxtradersedge.com. But I'd rather see consistency. Okay? And, oh, I'm just reading some comments. Hi, Anthony. Okay, I'll take some of your comments a little later. What are your favorite, well, let me just answer this. What are your favorite currencies to trade? What currencies do well with your tools? Michael, again, it depends. We have high probability trade setups. So we have 6 different trade setups that we look for. And when a market is trending, that's going to do well with our tools. In fact, when a market is trending, that's the only market that you should be looking at. Just throw away the markets that aren't following your trade setups, that aren't high probability trades. You just need to focus on the ones that are trending, okay? And that are whatever trade you like to take, even if it's an end of trend trade or one of the trend trades, you just have to find the best market to trade it. And that requires scanning. So I can't tell you which currencies are my favorite currencies. Any currency pair that's moving is my favorite currency at the time. Anthony says, I'm a current student and I've advanced my trading since I first started taking this course in November. I truly recommend this course to every trader in here. Anthony, I'm just so glad. Anthony is very young and he's been trading for a few years now. And I'm really glad that it's working for you. I'm thrilled to have you in the class. So let's take a step back now and do a little exercise together. This is new paradigms, a different way of looking at the same picture. What do you see here? Do you see an elderly couple holding each other? Or do you see a Mexican guitar player serenading his wife or girlfriend? Really, you see different things in this picture, right? Well, let's do an exercise with this. I think I told you that one of my favorite trade setups was the ABC pattern or the 1, 2, 3. ABC or 1, 2, 3. So what do you see here? Some of you will see waves 1, 2, 3 or waves ABC. Still others will see trend, correction, trend. On another level, others will see a way to profit from the markets day in and day out. Still others will see the trend is your friend until the end of the trend. Still others will see buyers versus sellers and learning who is in control. Still others will see the equality trade, where this leg equals the length of this leg. Still others will see an ABCD harmonic pattern. Still others will see this as a zigzag. Still others will see this as a flag pattern. Still others will see this pattern as a market fractal. No matter how long you've been trading for, you see these patterns over and over again in every single time frame. So let's start with a blank slate, a blank chart, a blank screen, and we're going to start here. So we're going to find the visible low price on the screen, and each one of you is going to look at this and you're going to see different things, just as we've described. But let's change our lens. And let's start to pretty up our chart and start to draw some things on our chart to have it make sense to us. Lens 2, a 1, 2, 3 reversal pattern. This is what we talked about earlier, where this bottom point is point 1, followed by point 2, followed by point 3, and we take out point 2 and we have confirmation for a buy. Lens number 3. The equality trade, where we measure the distance of the first leg and then we project this on the second move. Okay, and this can be an ABC, a 1, 2, 3, we don't know. This is one way to give us price targets. How do we refine these price targets? We add Fibonacci, the Fibonacci expansion tool. And we can run it on the first leg to project our 100% target, our 127.2% target, and our 161.8% target. So this just dresses up the chart. It gives us, it's like, it's a painting. It's like a painting to me. Now, this is one of our setups, the strategy that we use. This we call the fill the gap trade. When the market is starting to correct, we have divergence, the market is starting to correct, and we measure our price targets to the tunnel. Now we're going to add the Fibonacci expansion tool to our trade setup. And we see how the 161.8% extension goes right to the tunnel. Well, that's another confirmation. That's fantastic. Now we're going to wear another lens, and we're going to add our Wavy Tunnel Plus setup with bungee and semaphores. And we see the noble semaphore also hits our target. And there's a lot more to say about that as well. But finally, lens 8, here's a harmonic pattern. This is fantastic. So we begin to get precise analysis between our Fibonacci, our Elliott wave, our Wavy tunnel setup, and our harmonic projection. We begin to see convergence of a number of analysis methods coming together to provide a pretty secure target zone for our trade. Lens number 9, adding the harmonics to our Wavy tunnel setup, also targeting the exact same area. It really doesn't get any better than this when our analysis lines up with our strategy, our simple strategy, and our simple strategy confirms our analysis. And finally, when we add Elliott wave counts and we see that this entire move down has been a 5-wave sequence ending in a green wave 3, and that we are now doing an ABC correction, it all makes sense. So my favorite chart setup is actually the ABC, or the 1, 2, 3, and I would encourage you to start to take a look at that setup on your own markets, because it's this piece of the pie that you want to grab right here. All right? So do you need to get your glasses checked? We have looked at a blank chart and we've dressed it up. We added all of these analysis methods. We added a strategy to it. And for me, I don't know about you, but I like to have a number of confirmations. I think the markets today are really, really, well, I'm going to talk about it more on the next slide. They're really pretty mature, especially the currency markets. And there are a lot of smart people out there, and certainly the internet hasn't helped matters because everybody receives the information at the same time very quickly, and as soon as news comes out, it's already built into the markets very quickly. So we have to be smart about what we do. And by smart, I mean doing some analysis and having a good strategy. So this is putting it all together. What you're looking at is a chart showing Elliott wave analysis, Fibonacci, and a harmonic pattern. 3 analysis tools that, when combined, highlight high probability trades and give the trader confidence to pull the trigger and take the trade. We call this the convergence of 3 analysis methods, 3 giants in the trading world. When we combine this strategy that so elegantly maps out the market cycles, we're able to pinpoint where to enter and exit the trade. So when the precise analysis, which is our Elliott, Fibonacci, and harmonics, confirms the simple strategy, which elegantly maps out the wave counts and the market cycles, and the simple strategy confirms the analysis, we take the trade. So every trader can tell you about their trading journey. You can all tell me about your trading journeys, and I'm sure that every single one of you in the room today has a story to tell. Well, so do I, and I would like to share it with you. When we started out as a trading and coaching team, I thought that Elliott wave analysis was the be-all and end-all. That's right. I was wearing my Elliott wave lenses, and I wasn't taking them off. Elliott taught us how to count the waves and provide a structure around the market cycles, which I think is so very important. So we understood that if the market would trade in 5 waves, then it would be followed by a correction, period. And Elliott provided the context for the market moves, and I really did call it my crystal ball. And it also taught us how to use Fibonacci in targeting our trend moves and in measuring our retracements and pullbacks. And once we got the hang of these expansions and contractions in the market, we could be in sync with the market moves and learn how to ride the waves. In fact, for many years with me, Elliott Wave was king. Through Elliott, we developed confidence to read the market map, which is another way of saying what the next move would be. We found trading opportunities early, caught market tops and bottoms, and knew we were wrong when a certain Elliott rule was broken. And the 3 rules quickly is that wave 3 cannot be the shortest wave, wave 4 cannot overlap wave 1, and wave 2 cannot go below the start, point 0, the start of wave 1. Now, the rules for diagonals are different. An ending diagonal is a pattern that frequently shows up in the markets, and that's where there is overlap between waves 1 and wave 4. But now, I believe we do need something more than Elliott to make more money, save time, and reach our full potential, because the markets are more mature. As I said, there are lots of smart traders out there, all chasing the same dollar. So we need to be even more precise and picky about our trades. It is too easy to give back hard-earned profits. So that's why we need a good strategy, and that's why we've added harmonics into the mix, harmonics and Fibonacci, because adding harmonics really helps us in pinpointing the ends of moves when we combine it with Elliott. So I'm glad that all of you took some notes here and let me know what you were seeing as I was showing you the charts. That's great. And did I say 1,000 pips earlier? I did. There are some people that do, claim to make, that many pips in a month. And if you're one of those people and you make it consistently, you can contact me. So now I want to just take a little break and show you do a little marketing here and just show you what we have to offer before going to live markets. But first I want to, oh my gosh, there's a comment there. Oh yes, I don't know if I want to read this comment because I don't know if you're going to believe it, but it is true. Hi, Robert. Jody's course is very good. I've taken all of her courses over the past 2 years, and I'm in the New York trading room. There are trading rooms to join after you take the course to help you apply and improve the skills you learned in the course. The guy who runs the New York room last year ran $3,000 to $90,000 in 1 year. He started over again in August with $5,000. He is up to around $17,000 now. All of this based on what you learn in her course. So thank you, Bob. Bob is one of my great students who's really doing well in his own trading. Now, questions. Can you also apply this to the SPY? You can apply this to stocks. We have a stock room once a week, and you can apply it to all of the CFDs on the Forex trading platforms, which includes commodities, which includes stocks, which includes indices, and includes currency pairs. All right, so absolutely. So let me just tell you what we are offering you today. We're offering you a very comprehensive program, a very comprehensive course. There are 4 courses in one. There's the Elliott Wave series, which is 4 modules or 9 learning objects actually. We have the Wavy Tunnel Plus, which is 7 modules and with lots of, new examples because this has been updated. And then we have our Fibonacci primer and our harmonic patterns, which is 6 modules. That is already in the website. So as soon as you get into the website, you can start learning right away, and you can start with any module that you want to start with, although this is what we recommend. In addition, you get the 6 wavy tunnel trade plans that I told you about for the trend and the end of trend. We have 4 trend trades and 2 end of trend trades. And we have since added Elliott Wave Ultimate Trade plans. You can see a little bit of this, which includes the harmonic pattern. So it's the Elliott Wave 345, for example, ending in a harmonic pattern. And a lot of the students are really getting into the forum, posting their trades and using the trade plans and coming up with terrific trades and then following them through. Because when you come up with a trade plan, it means that you have an entry point, an exit point, and you manage your trade as well. So this is what you get in addition to all the modules. And I'm just going to read you a testimonial. As a harmonic trader on a daily basis, I get to witness firsthand how the rhythm of the market is in sync with the mysterious Fibonacci order. The way price adheres to the hidden order governed by the Fibonacci numbers beneath the surface of seeming chaos always leaves me in awe. The Elliott Wave Ultimate System is an evolutionary leap in our understanding of this Fibonacci order because it combines both Elliott Wave and harmonics and reveals the profound interconnection between these 2 methodologies. No other trading system has so clearly demonstrated that ultimately these 2 methodologies are one, and the convergence of harmonics, Elliott Wave, and Fibonacci reveals the missing link in our understanding of the Fibonacci order behind market action. If you want to expand your understanding of the market and take an evolutionary leap in your trading, I highly recommend the Elliott Wave Ultimate course. Andre P., Canada. So Andre is now working with us, and he comes up with so many different trades during the week, and he posts them in the forum for all of our students to have a look at and to see if they can confirm what he's seeing to be able to take the trade. I'm telling you, he finds market tops and bottoms like there's no tomorrow, and he's just a fantastic trader, combining all of the work that he did through the course. There are bonuses in addition to the modules. We do coaching webinars, so live sessions, and there are many more live sessions than the 18. You get access to recordings of the past webinars. You get 2 months access to weekly live market analysis rooms. You get access to our daily counting service, which Juan does. Juan is one of the best Elliott Wave strategists out there, and I've worked with many during my time at the bank and even subsequently. He's fantastic. And there is a daily Forex trading room, as Bob mentioned, both in the New York and the London market. And we have an end-of-day stock and options analysis room once a week, which Juan runs, and he just analyzes any stock that traders are willing to see. You get the comprehensive trade plans, and Andre has produced a series of Elliott Wave Ultimate tip clips looking at live markets. Neil today is also one of our team members. He runs the London trading room. He did a session today. He created an entire checklist on Excel for the Wavy Tunnel Plus setups. It's just fantastic. He went through it in a webinar today with our students, and it really helps you to make sure everything is in line before taking the trade, because as I said, you want to be really certain that everything lines up, that the checklist, that you can just check off the list of requirements that need to be there before you take the trade. We have a private membership forum, which of course, once you take the course, you are a part of it always. You get a course manual, and you join a Skype group, and you send emails, and we answer your emails, and you can even, we even offer phone support from our amazing team. So you can go to fxtradersedge.com/special to see this offer. And let me just read you another testimonial. From the brim of giving up to success, I started trading Forex in 2005, and I must admit that I got to a point I was going to throw in the towel. For many years, I was struggling. I met a few good people in the trading community and many bad ones. The first day I was introduced to Jody Samuels and the Elliott Wave Ultimate program, I knew I had found my destination and my trading life was about to change forever. I had my doubts like most people do initially, but wow, Jody and her team I found were only interested in one thing, to turn the little ordinary guy into a successful trader. The beauty of the program was that you get to learn the basics of Elliott Wave theory and internalize a strategy through the Wavy tunnel system. Although I had developed my knowledge of advanced chart patterns and support and resistance, having Elliott Wave counts provided by Jody's team and using the Wavy tunnel to determine entries and exits became a fantastic roadmap to help execute trades. It's like going into the middle of an ocean armed with survival tools to survive the storm. You get to look through a lens that filters out your entries. Over and out. Good luck, Isaac. And Isaac is still a member of the New York Trading Room and the Skype group, and he trades successfully and posts his trades. Like I mentioned before, it's important to be accountable, and it's important to post your trades, get feedback. So that's what we are all about. And I have a few team members in there writing notes to each other, and I didn't plant them there. Honestly, I didn't. So Robert and Anthony, Bob and Anthony, thank you for being here. That's great. So here are the prices. Elliott Wave Ultimate, that's the one you want to do. It's $12.97, and you just get so much with this. Again, it's 4 courses in one. If you just want to start small and you want to start with the Elliott Wave series, you can start with the Elliott Wave series for $3.97. And if you want to add the Wavy tunnel to that, and then you can do that as well for $9.97. But I would strongly recommend that you go with Elliott Wave Ultimate, which is the entire package. And let's see, is the course applicable to stocks and futures? Yes, it is applicable to stocks and futures. In fact, I have a coaching client now who only trades futures markets, and he's using the Wavy tunnel on the futures markets. We've set him up, and he's very, very happy. Now, most of the futures markets anyway, well, not most, but the financials you can get on a Forex trading platform, it doesn't matter. You can put this trade setup on any market that you trade. I want to stress again that the markets are fractal so that the patterns show up whether you trade stocks, futures, or Forex. Yes, my email is jody@fxtradersedge.com. Now, I just want to give you another opportunity to contact me, and you might want to post this. Maybe I can try to, Yana. This is a way to contact me and to set up a 15-minute or 30-minute chat with me over Skype. We do it over Skype or by phone, whatever you want. And if you want to ask me questions privately, just set up an appointment. You click on that link and you can set up an appointment, and we can talk. You can tell me about your trading. I also am a trader's coach, and I do have some coaching clients, and we can talk. So it's visita.com/v/jody.fxtradersedge. I know it's a long link, but feel free to contact me and get in touch. Visita, V-I-C-I-T-A, V-C-I-T-A. I think there's an extra I in there. Okay, so other questions. Do you need a special platform to draw the harmonics? Well, there are some free softwares out there that allow you to draw the harmonic patterns. You can certainly draw them there. You can certainly draw them on an MT4 platform. I use Motive Wave, which is a paid platform, and TradingView.com is a pretty good free software which enables you to draw the harmonic patterns and also draw the Elliott wave counts. So our charting software is available. We can set it up on any trading platform, okay? Any trading platform at all, whatever trading platforms you are trading with or trading on. Yes. RB, what trading platform are you using now for your stocks and futures? Yes, okay. So you can certainly get the Wavy tunnel set up on your Thinkorswim trading platform. Absolutely. And we would help you set it up. And you would be most interested in coming into the Monday room. Interactive brokers? Yes. The same. Yes, actually, you can get it on any, you can put it on any platform. It's just moving average. It's a bunch of moving averages and the awesome oscillator, and it's very easy to do. Except for the bungee and the semaphores. The semaphores is a bit trickier, but for the bungee, we can certainly look at setting it up on other platforms if you choose to use that. Some of you will be minimalists and you will not want to use those, and others will want to use those. I just want to, before I get to some markets, you know, we would love for you to join us in the program, but I understand that, you know, not all of you are going to join us in the program. But I just want to show you one more thing. We have set up a way for you to get our wave counts for free. We have a free service, and if you go, this is relatively new, ElliottWaveDesk.com. This is a way for you just to get to know us better, and there is also a paid service here, but you can try it out for free, and you just need to put your email address in there and get a, you know, so you can get your login information, name and email address, I think. And you will get wave counts on the Euro and the S&P, not every day, but I think a few times a week. And you will also have access to our fundamental view. So go to ElliottWaveDesk.com if you'd like to try out our wave counts. All right, ElliottWaveDesk.com. All right, why don't we get to some live markets now? Are there any other questions? Because I'm going to put up my Motive Wave and show you some live markets. The application, let me show a region or a monitor. Hang on a second. Okay. Can you see my screen? Yes, you can see my screen, I believe. All right, let's start with the, why don't we start with the Euro? What do we have up here, the Euro? Now, I already told you that I want to do that we do a top-down approach. And we have, these are Juan's wave counts. I work with Juan, so Juan is not available to be with us today. So I'm going to show you our wave counts on the Euro. Now, this is a monthly chart. Let's talk about what pattern do we see here. We're labeling this an A and then an A, B, C, D, E. An A, B, C, D, E is a triangle. Okay, it's a five-legged triangle, and it's a triangle in classical technical analysis, and it's a triangle in Elliott wave analysis. So first of all, the way to trade triangles is to draw your trend line. We spoke about trend lines, and to start to wait for that break, for the confirmation, and then sell once we break down through the trend line. Now you can see what happened after we completed the wave E. And we were calling for a market reversal because of this wave count, the triangle, and looking for a move down. In fact, Juan was projecting a very big move down, I think below par, and I said, Juan, please do me a favor. Let's be a little bit more conservative. Here we are at 136, and he's calling for par, and I'm saying, no, 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 you can't do that. We have to go one step at a time. Now, of course, it's many months later, and where are we? We're at 117 already, right? So this is the monthly. We start at the monthly chart. Now, looking at this, it's all red candles moving down. This is pretty scary. It's all based on the fundamentals. It's very, very scary, you know, to sell based on this monthly chart. So let's go down to the weekly. And this is also pretty scary. We get down in the new year. You know, it's pretty scary to just, it's like throwing a dart and just selling because we're in a very steep downtrend. Well, I like to look to see what's happening on the smaller time frames now that we know what the trend is. And I'm going to put up some more wave counts. Maybe that's too many wave counts. Let's just take a little bit off here. Okay, so now we're on the daily, and we are, from this captures the breakdown through this trend line from when we completed the triangle up here. And you can see that we are in a very extended move. So maybe now is the time to count. Let's just see if I can show you what I meant by counting the number of waves. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12. Like we haven't completed this sequence yet for a wave 3, but you can see that this wave 3, blue wave 3, is very, very extended as we're counting it. Very extended. So if we projected the wave 3 based on the wave 1 using our Fibonacci tool, it would, it's very extended. Let's try to do that now. Why don't we do that? Just out of curiosity, because I haven't done that yet. To see how far it's traveled. Okay, so what I've done was I've used the Fibonacci tool and I ran it against the blue circled one, and this is the wave 3 expansion. So we haven't quite hit the 423.6% yet, but this would be one target, because we've already broken through the 261.8%. And notice what happened at this level. I'm going to draw a trend line to show you. Well, here, we hesitated at this level, the 261.8, because that was a big move. And that's when we had a correction back up to 125, and then continued its drop in year end and beginning of the year. So our next target based on this measurement is 423.6, which is 1.1621. If we measure this wave 1 against the current wave 3 that we're in, the black wave 3, we get a second target of 161.8%, which takes us to 115.36. So we're looking for a move in this black wave 3, that is the next move somewhere between 115.36 and 116.21. I know it's hard to fathom, but let's go down to the 4-hour chart and add some wave counts and just see where we are. So we are looking at a correction. Now, tomorrow non-farm payrolls is coming out, so depending on what that is going to be, that could give us the correction that we need, that we're looking for, or not. I mean, how do we know, right? We don't know, and I haven't done a thorough analysis on this. So why don't we put up the awesome oscillator? Let's just put up the awesome oscillator for you, and I'll move pretty quickly through this. Okay, yeah. On this time frame, which is the 4-hour, we do not have divergence, but I can see that we do have divergence on the smaller time frame. I can tell just by this, but I would have to go down to the smaller time frame to show you that. So that's what we're looking for in the euro. A continued move down and a corrective move back up again, and that could be after tomorrow's non-farm payroll. Let's just see this. Yeah. So here we are at the, we do have divergence here, okay, between wave 3 and the wave 5 of this 3. And look, we've moved up, we've come down, and a confirmation would be if we take out this price high at 118.19 for a corrective move higher. So that's the euro. If you can show your wave count, could you do it on GC, CL, TSLA, Apple, and HEBA? I'm not going to show, I don't have the stock data up right now, so I can't really show you those, but these are certainly markets that we look at on Mondays in our stock room, so I apologize for that. But let's have a, you want to see what the S&P? Let's look at the S&P. The S&P, let me go back to the weekly. Now, this is our wavy tunnel setup. So you can see, first of all, that price is, it's above all the moving averages, right? It's above the moving averages. So the S&P had one major sell-off over here and then another one, but with a very quick move back up again. But we have not, like the moving averages are still pointed up. So yes, the market is, nervous, but there's no reason to start selling the S&P index because we're at lofty levels. We're getting no indication whatsoever that we're going to turn around. So let's go back down to the daily and just see where we are right now. In this sequence, we've done a wave 1 up, a wave 2 down, and we're calling for the start of a wave 3 up. So another wave 1 and a wave 2. We call that a 1-2-1-2 move, and we get that count when we see a 5-wave move followed by a correction and another 5-wave move followed by a correction. So we cannot count this 1, 2, 3, 4, 5 because that doesn't work. Wave 3 cannot be the shortest wave. So we call it, label it 1-2-1-2. So this is the daily. Let's just go down to the 4-hour. And I have 3 minutes left, I think, here. 2 minutes left, and then my time is up. Yes, so that's what we're seeing. We're seeing that we are in the middle of a correction, a corrective move down. So we have 3 1-2-1-2. We're now the green 1-2. And all of our wave counts are based on the colors of the rainbow, Roy G. Biv. So the bigger time frame, red, orange, yellow we skip, green is the next, blue, indigo, violet. And our indigo is our magenta and our violet is black. So that's the S&P. The pound, let's see, what can I do with the pound quickly? The pound. All right. What we're saying is that the pound is ready for, like, we're nearing the end of this move down, and we are ready for, let me just go down to a smaller time frame. See if we have any targets here. Okay, let's have a look. Okay, so this is interesting. So we've targeted wave 3 versus wave 1, and we have reached the 261.8% projection of the wave 1. Okay, so that's a target. If we go below this, then we're gunning for 423.6. But in the meantime, we've counted a nice 5-wave sequence here, and we are looking for a correction back up. And what size correction? Well, then we would have to run our Fibonacci tool and measure the last swing move from the wave 2 to the wave 3, assuming that it ends, and the 38.2 would take us up to 152.88. So that would be our best guess for that. Okay, that sums it up for today. I want to thank you very much, and I look forward to having you join us in our trading program, and or contacting me to get to talk about your trading. So thank you very much, Trading Pub, and see you again soon.
Well, thank you, Jody, for that in-depth discussion on how you use Elliott waves, Fibonacci's, and harmonic patterns to identify trading